everyone. Virgo Triad here. It is April 18th, 2018. I hope everybody is having a good week so far. You'll have to forgive me. I have a very bad cold, so I'm going to try to get through this because it's very important and urgent that everybody has this information. But it may be a little bit more difficult to understand me than normal. So forgive me for that. Okay, and just to update you, the IRS does something called the Dirty Dozen of tax scams every single year. This year, it was done in 2017 in February, but it has been updated as of March of 2018. What makes this as important is the YouTube video section that you are seeing right here has been updated. And I'm going to go ahead and go into this and give you some additional information that you guys need to know because this pertains directly to TDA and A4V information. Okay, the main thing that this deals with is frivolous tax arguments. It has to do with everything from arguing that you don't have to pay taxes, or that the IRS is not actually a United States part of the United States government, all the way down to the A4V process. Apparently, the IRS is very well aware that there are YouTube videos out there of people that are selling frivolous tax packages, which of course have to do with anything that is forwarded to the IRS. So that includes A4V packages, and it includes anything having to do with the TDA supposed trust accounts. Now, the reason why this is important is because the updates that have been placed into this. I'm going to go ahead and scroll down here, and it tells you don't get talked into using a frivolous argument. Taxpayers have the right to contest their tax liabilities in court, but they must obey the law and pay their fair share of federal taxes. The penalty for filing a frivolous tax return is $5,000. The penalty applies to anyone who submits a purported tax return or other specified submission if any portion of the submission is based on a position the IRS identifies as frivolous in this notice, which we're going to go over in just a moment, or reflects a desire to delay or impede administration of the tax laws. The list is not all-inclusive, and the courts may add to it at any point. Those who promote or adopt frivolous positions also risk a variety of other penalties. For example, taxpayers can face an accuracy-related penalty, a civil fraud penalty, an erroneous refund claim penalty, a failure to file penalty, a failure to pay penalty. Tax courts may also impose a penalty against taxpayers who make frivolous arguments in court. Taxpayers who rely on frivolous arguments and schemes may also face criminal prosecution for attempting to evade or defeat tax. Taxpayers may also be convicted of a felony or filing a false return. This is important. Those who promote frivolous arguments and those who help taxpayers to claim tax benefits based on frivolous arguments may be prosecuted for a felony. This definitely has to do with your gurus that are out there. They are now at the point where they are clearly fed up, and they are now saying that they're not only going to go after the party, but once they find out who the guru is, they're going to go after them too and prosecute them for felonies. Now, how do I know that the frivolous arguments have to do with A4V and have to do with the TDA trusts? Well, let me take you over there and show you. Okay, so on the list out of the Dirty Dozen, number 8, contention. A Form 1099 OID can be used as a debt payment option, or the form or the purported financial instrument may be used to obtain money from the Treasury. This right here, what they are just talking about, is the A4V, folks. Advocates of this contention encourage individuals to use a Form 1099 OID, original issue discount, or a bogus financial instrument such as a bonded promissory note as what purports to be a debt payment method for credit cards and mortgage debt, excuse me. This scheme has evolved somewhat from an earlier frivolous position under which a secret bank account, sometimes referred to as a straw man account, was supposedly created at the Treasury Department for each U.S. citizen that individuals could use to pay tax and non-tax debts. Those who put forth this theory often argue that the proper way to redeem or draw on the account is to use some form of made-up financial instrument. This has frequently involved what looks like a check drawn on the United States Treasury or similar paper instrument, bonded promissory notes. Now, I'm going to go ahead and link all this information in the description area, but I'm telling you guys right now, you can argue all day long that the IRS, you can push back, as April Lejeune says, for example. Yeah, you push back, but you're pushing back against somebody who's already warning you that this is fraud, who's already telling you, we've put it out there in your publications. We are not going to put up with it, and we're going to go after anybody who does it. So, filing a A4V will not only get you in trouble and at the very least fined the $5,000 per A4V that you send in, but now they're talking about also going after whomever it is that actually suggested that you do it. So anybody selling packages. I mean, I can't make it any clearer, guys. This is very clear. Very, very clear. Okay, so this is very important. What I'm going to do is I'm going to go ahead and put the PDF file that you guys can download and read the entire section for the Dirty Dozen on. It has to do with everything from, I mean, there's 12 different ones, and a lot of the gurus use several of these arguments, claiming filing a UCC allows you to not have to pay taxes, all kinds of crazy stuff. So it's important that if you've done any of these things that you actually read this and know what they're saying. The argument that is based on the fact that, oh, they're just full of it, they're going to test you to see, you know, whether or not you know what you're talking about and you know what the law is. For those people, you really need to take a look at it, because there are actual cases which sets precedent for people to pay attention to. Even the gurus have warned you that if there's precedent set in case law, then, you know, that's what they call quote unquote common law. So that's even within their belief structure. There are several cases that this has happened. And let's not forget, they're mentioning under here, taxpayers who rely on frivolous arguments and schemes may also face criminal prosecution for attempting to evade. Taxpayers may also be convicted of a felony for filing a false return. And those who promote frivolous arguments and those who help taxpayers to claim tax benefits based on frivolous arguments may be prosecuted for a felony as well. All right, so I would definitely listen to this, because it is a very stern warning. It was updated March of 2018 on top of the original list that was done February 15th of 2017 in the original publication. This is an updated version. Please take a look at it. Link will be in the description. Hope everybody has a good day. Bye-bye.